The Intelligent Investor, by Benjamin Graham, is a timeless masterpiece that provides invaluable insights into the world of investing and finance. The book is divided into several chapters, each offering a unique perspective on how investors should approach the market with wisdom, discipline, and a focus on long-term value. Let's delve into each chapter in detail, summarizing the key concepts and lessons. Chapter 1. Investment versus speculation. Graham starts by distinguishing between investment and speculation. He defines investment as the careful analysis of a company's fundamentals and the purchase of its securities when they are priced below their intrinsic value. Speculation, on the other hand, involves buying and selling based on short-term price movements without considering the underlying business. Graham emphasizes that true investors focus on value, while speculators are driven by market trends. Chapter 2. The Investor and Inflation. In this chapter, Graham discusses the impact of inflation on investments. He highlights that investors should consider the effects of inflation when analyzing potential returns. He introduces the concept of defensive investor versus enterprising investor, where the latter is more willing to engage in strategies that protect against the eroding effects of inflation. Chapter 3. A Century of Stock Market History. Graham presents a historical overview of stock market performance over the past century. He demonstrates that markets are subject to cycles of booms and busts, highlighting the importance of understanding market history to avoid repeating mistakes. This chapter emphasizes that rational investing should prevail over emotional reactions to market fluctuations. Chapter 4. General Portfolio Policy. The Defensive Investor. Graham introduces the defensive investor, who prioritizes safety and preservation of capital. He suggests a balanced portfolio of stocks and bonds, with a focus on diversification to mitigate risks. The goal is to achieve consistent returns with reduced exposure to market volatility. Chapter 5. The Defensive Investor in Common Stocks. Here, Graham elaborates on the defensive investor's approach to investing in common stocks. He emphasizes the importance of stable companies with a history of dividends and earnings. Graham suggests the use of an index fund to achieve diversification, as the defensive investor's main concern is to avoid substantial losses. Chapter 6. Portfolio Policy for the Enterprising Investor. Negative Approach. For the enterprising investor, Graham discusses a more active approach involving individual stock selection. He introduces the negative approach, where investors analyze and eliminate poor stocks from consideration. He advocates for a more demanding evaluation process to identify attractive investment opportunities. Chapter 7. Portfolio Policy for the Enterprising Investor. The Positive Side. Continuing from the previous chapter, Graham outlines the positive approach for the enterprising investor. This involves selecting stocks based on fundamental analysis and market conditions. Graham stresses the importance of caution and thorough research to uncover value and capitalize on market inefficiencies. Chapter 8. The Investor and Market Fluctuations. Graham delves into the psychological aspects of investing, addressing the impact of market fluctuations on investor behavior. He introduces the analogy of Mr. Market, a character that represents market sentiment. Graham advises investors to take advantage of Mr. Market's emotional swings by buying when prices are low and selling when they are high. Chapter 9. Investing in Investment Funds. Graham discusses the concept of investment funds, including mutual funds and exchange-traded funds, ETFs. He offers guidance on how to evaluate and select funds that align with an investor's goals. While cautious about the potential pitfalls of funds, Graham acknowledges their convenience for passive investors. Chapter 10. The Investor and His Advisors. This chapter focuses on the role of investment advisors. Graham highlights the importance of choosing advisors with integrity and competence. He also emphasizes that investors should remain informed and avoid blindly following advice without understanding the underlying rationale. Chapter 11. Security Analysis. The 5th and 6th editions. Graham reflects on the changes in security analysis over time. He acknowledges the evolving nature of the investment landscape and the need for investors to adapt their strategies accordingly. He also emphasizes that while analysis methods may change, the principles of value investing remain constant. Chapter 12. Things to consider about per-share earnings. Graham discusses the significance of per-share earnings and how investors should evaluate this metric. He warns against blindly relying on reported earnings and encourages investors to consider factors like accounting practices and one-time events that can distort earnings figures. Chapter 13. A comparison of 4 listed companies. Graham offers a practical exercise by comparing 4 real-life companies using quantitative and qualitative analysis. He highlights the importance of analyzing financial statements, earnings history, and other relevant information before making investment decisions. Chapter 14. Stock selection for the defensive investor. Graham outlines specific criteria for the defensive investor's stock selection. He emphasizes financial stability, dividend history, and earnings consistency as crucial factors. Graham also introduces the concept of a diversified stock portfolio with specific weightings. Chapter 15. Stock selection for the enterprising investor. For the enterprising investor, Graham suggests a more active approach to stock selection. He emphasizes the importance of both quantitative and qualitative analysis, including a comprehensive evaluation of the company's financials, industry position, management quality, and growth prospects. Chapter 16. Convertible issues and warrants. Graham discusses convertible securities and warrants, which offer investors the opportunity to participate in a company's growth while providing a safety cushion. He explains how these instruments work and the factors to consider when evaluating their investment potential. Chapter 17. 4 extremely instructive case histories. Graham presents 4 case studies of companies that experienced significant fluctuations in stock prices. These case studies illustrate the importance of understanding business fundamentals, being aware of market sentiment, and the potential for value to emerge during market downturns. Chapter 18. A comparison of 8 pairs of companies. Similar to the earlier comparison of 4 companies, Graham provides a detailed comparison of 8 pairs of companies. This exercise highlights the variations in financial metrics and underscores the necessity of thorough analysis before making investment decisions. Chapter 19. Shareholders and Managements. Dividend Policy. Graham discusses the relationship between shareholders and company management. He explains the impact of dividend policies on shareholder returns and evaluates the pros and cons of dividend distributions versus retaining earnings for growth. Chapter 20. Margin of safety as the central concept of investment. In the final chapter, Graham reiterates the importance of the margin of safety as the central concept of investing. He emphasizes the necessity of buying securities at prices significantly below their intrinsic value to protect against potential losses. In The Intelligent Investor, Benjamin Graham provides a comprehensive guide to rational investing, emphasizing the principles of value investing, discipline, and a focus on long-term value. Each chapter offers a unique perspective on the intricacies of investing, helping readers develop a well-rounded understanding of how to navigate the complexities of the financial markets. Through his insights, Graham equips investors with the tools and mindset necessary for achieving financial success while minimizing risk.
As we conclude the summary of this captivating book, we've delved deep into its intricate characters, heart-pounding plot twists, and thought-provoking themes. The journey through these pages has been nothing short of remarkable. But remember, this is just a glimpse into the rich tapestry that the complete book offers. To fully immerse yourself in the author's world and experience every emotion, every revelation, I encourage you to pick up a copy of the book and embark on the full adventure. And if you've enjoyed this summary and crave more literary insights, thought-provoking discussions, and exciting book-related content, don't forget to subscribe to our channel. By subscribing, you'll ensure you never miss out on our latest explorations of literature's hidden gems and popular favorites. Thank you for joining us on this journey, and we look forward to sharing more captivating stories with you. Subscribe now and let the exploration continue.